Mike, no doubt you heard that fiery discussion with Rick, and I'm not knocking the Fed in 2020. We had no idea what was going to happen for about a year. But after about a year, we started to realize that certain things were happening in certain states. Not a health judgment there, but it's the reality of what was on the ground. How late, or maybe not at all, was the Federal Reserve's policy response? How responsible are they for what we're seeing right now?
Yeah, the Fed was pretty late to the party, Brian. I think you can look at the Fed's policies starting, call it middle part of last year, maybe out to September, latest case, and the Fed should have been cutting back. At a minimum, it should have stopped increasing its portfolio size, and it didn't. That sounds kind of arcane. Probably should have increased the Fed funds rate a good 3 to 6 months earlier than it did, but it's pretty far behind at this point, and it's going to play catch up pretty aggressively, we think, over the next 3 to 6 months.
Yeah, and the market reacting so strongly to what is going to be potentially a 0.75% or even 1% increase at the September meeting next week. Why is this additional 25 basis points, whatever it may ultimately be, Michael, why is that sending the Dow down 900?
Yeah, it's kind of funny, Brian. We think about it and talk about it and say 75 is sort of a given. Well, think about that for a second. 75 basis point hike people are taking for granted. This is incredible. A few months ago, it would have been completely off the radar screen. Now it's almost commonplace. So it's this notion the Fed doesn't really know how much it needs to do. I think that's what spooks the market. So is it so much about 25 basis points extra 8 days from now? Not really. It's more about what do we expect 6 months out, 9 months out, a year out? Is it 4.30, which is what the market price is today for the terminal rate? Is it something like 5%? We're just not all that sure. And more importantly, the Fed doesn't seem all that sure. I think that's what's scaring people.
Yeah, and you wonder, does it also stretch out, and it's going to sound ridiculous today, Michael, you forgive me, rate cuts. At some point, we're going to be talking about rate cuts because the economy will slow down. The Federal Reserve has told us they've got to basically crash or at least slow the economy to get inflation down. It's the only way they can do it. Does this also then push out this concept of when the Fed might start to re-ease? And I know how silly that may sound right now.
It does sound a little bit strange, Brian, but it's sort of interesting when you consider the market pricing. There actually is some easing price toward the latter half of next year. Now, my colleagues and I at Wells think this is frankly a bit crazy, but when you look at the Fed, you'd say if the Fed does push too far and the economy completely craters, could it possibly cut late next year? Maybe, but a lot of things would have to line up. I think the market's gotten ahead of itself. I think it's a case of wishful thinking really dominating the factors on the ground, and the market will push back that rate cut toward at least the last part of next year, maybe to 24.
Shepard Smith here. Thanks for watching CNBC on YouTube.